Hello, this is Jordan, and this is the Precious Metals video market update for Palisade Radio listeners. Today is Wednesday, November 5th, 2014. And in this update, I'm just going to focus on gold with a few side comments on the rest of the sector. Looking at gold in the last couple weeks, gold has broken below weekly support at $1,200 an ounce. About 6 weeks ago, it closed below that support, and then it rallied for several weeks. It rallied back up to the 50-day moving average or the 10-week moving average, as we see in this chart. And notice the red arrows. And at the end of 2012 and early 2013, gold had fallen below the 10-week moving average, and it remained below it. And then when it broke support at 1,500, it went on to declined sharply below 1350 and then ultimately down to 1200. So we're in a similar situation here where gold has broken below important support at 1200 and it is remaining below its 10-week moving average, which is pointing down, or sloping down, I should say. So this is a very bearish situation. Now, a couple things. When you have a market breaking down like this, what you want to look for are the very strong support targets. And so the next strong support targets for gold are 1080 to 1085, which is the 50% retracement of the entire bull market. Now, secondly, 1000 is obviously a very key level. It's a psychological level. And then just looking at prices on the chart that have been support and resistance, that is the next level. So those are the levels that I would focus on. Now, at the bottom, that is my own data, which I have put in this chart. And that is the speculative position in the COT, in the futures market. And so what I do is I divide that by the open interest to get a better read and to compare it to the last 10 or 15 years, because the net position is always changing and open interest is always changing. But looking at it as a percentage of open interest, I think makes more sense. And this data is as of last Tuesday, so the data does not include the really sharp sell-off we saw at the end of last week, but that data shows that the net position was 24%. Now, the lows in 2013 were 5 and 6%. Now, we won't get a new reading until Friday, but even after the severe decline we've seen recently, I would guess that the net speculative position is still above 10%. So that tells you that there are still speculators left in the market, still people that can dump their holdings and drive gold down much lower. Now, this is a chart of all the bears in gold, but I excluded the 87 to 93 bear, which was the longest in terms of time, but wasn't so severe in terms of price. And then the 1980 to 82 collapse of the bubble, that was severe in price, but not in time. That was very quick. And so what we see here are four bears. The one in black is the current bear, and it best compares to these other bears. And you can see that the 96 to 99 bear bottomed using this scale of the 2011 bear. That 96 to 99 bear bottomed in the mid 1100s, around 1150 somewhere, and that was very long. Now, the two shorter bear markets bottomed at 994. That was the 75 to 76 bear, and then the 83 to 85 bear bottomed just below 1100. So bears are a function of price and time. The longer a bear is, the less severe it's going to be in terms of time, whereas the shorter bears tend to be more severe in price because they're shorter in time. The current bear, as you can see, it fits nicely between these three bears. It's kind of been following the 96 to 99 bear, but this chart tells you that we can probably expect, just by looking at this chart by itself, it will tell you to expect a bottom and an end to this bear market somewhere maybe below 1100, but not below 1000. So maybe 1050, maybe 1030, who knows, but it's just kind of giving us a ballpark. We know that gold's at 1140 now. We know that it doesn't have strong support until 1080 and then 1000. So you put all these factors together, it tells you that gold has more downside. And this chart uses weekly data. So if this chart bottoms at 1050, that is just the weekly low. Go back to 2008. The weekly bottom, I believe, was 723, whereas the daily bottom I think was about 700 and the intraday bottom was below 690. So if we're looking at a weekly low at 1050, that doesn't mean that gold can't bottom at 1000 or maybe even 995. Who knows? So I hope these two charts have given you some good information and some good analysis as to where gold might bottom in the coming days and weeks, or maybe it takes a couple months. I don't know. The last thing I want to mention is that silver and the mining stocks, they started their bear market before gold. So look for those markets to bottom before gold. I don't know when that's going to happen, but pay attention to the price action in those markets, especially after gold breaks below 1080. I believe at that point we could start to see a bottom. That's all for today. If you want to follow my work, visit thedailygold.com. You can also email me, jordan@thedailygold.com. Thank you all for listening, and I wish you good luck, good trading, and investing.